Hi, good morning, everyone. This is the India market review for 10th October 2017, Tuesday, and we are doing this session sort of early morning before the market opens today. It's about 7:30 a.m. right now, and uh, basically plan to do part one of the IMR, right? I forgot to put that part one global local. And after we finish this, if there's something particularly strong that we find on any of these studies, then we'll have a look at some more stuff. All right, so we'll jump in with looking at the global markets and see how those have been performing. So this is the Dow Jones Industrial Average, DJIA, and well, it's just been rallying up and up and up for quite a bit now, isn't it? I mean, in a sense, after it broke out of its range in May 2016, or rather in not May, this would be 11th September 26, some September, so almost 1 year. It's been in a continuous rally, really impressive, from 18,500 to right now, where it continues to rally higher at 22,775. Right, nice higher tops, higher bottoms, nice green candles, nice marubozus, etc. So this is really something which is got lots of strength, absolutely no weakness in any of the indicators either, and well, looks like it is headed higher. Who knows, maybe even 25,000 could perhaps be possible by the end of the year on Dow Jones. And looking at the broader market, S&P 500, that of course also continues to go up with the Dow Jones, and so that's another really good place to be in, right? Really good strength, and yep. Okay, moving over to Europe, looking at Germany. So the German elections are over, as you know. Angela Merkel is back, though with not as strong a majority as she had, and well, the German index has gone back to its life high after the elections, and just at the verge of perhaps going even further and breaking that. It has sort of made a new life high, and looks like 13,000, 15,000 is very much on the cards on the German index. So this is really another uh, gratifying thing to see. Looking at France, so this has been something which has not been able to move back to its life high for years, but looks like this time it's going to do that. Macron, Eurocentric, stable French economy, trying to do some sort of labor reforms for which, of course, there is resistance. And by the way, there's some bug on the volume data, but the price data is correct. And this continues to rally, and looks like this time around the French index could actually go back to its life high at around 6,150. And if I was trading global markets, I would definitely be wanting to invest in the CAC and also the DAX. Just look at how useful and easy it is to be able to do that at a global level on multiple you know um, indices, and make one's life much easier, I would say. So this is the monthly chart, really looking good, right? So I do expect that this could go higher, and we are in that sort of feel good type part of the year, Christmas, New Year, all that, and overall, all said and done, no major war has broken out, no big conflict has broken out. A lot of noise, but nothing major so far. So, well, that's uh, how the world is. Nikkei, right? Back to its. So there's this new, I think, spending push in China. Sorry, in Japan. Some 10 billion US dollars further for some economic stimulus, right? So this has gone back to its resistance and looks like it is likely to go up and break out of that and go further. So 20,775 on the Nikkei, and 25,000, 23, who knows, 30,000, 6 months, 1 year. That will be a 50% move on Nikkei. That is massive. Of course, this is a monthly chart. Okay, we didn't look at FTSE. Oh, so FTSE is back to its life high, as we can see. Right, so there was this big thing in the UK about uh, Prime Minister May sort of losing support, gave a sort of bad speech. Her throat really was not okay, and then some gaffes happened and all that. But anyhow, all said and done. Oh yeah, and I think unfortunately I don't have that chart here, but the British pound was losing value, so that perhaps one reason why this was going up. So that's one big challenge, global investing. If you are, let's say, invested in the FTSE as a foreign investor, anywhere from outside UK, this would really not be a happy situation, because it's just you're losing on the currency side while you're gaining on the rupee side. Sorry, on the index side. It's like the Dolex in India. I don't know if we have that. Let me see. I don't think it will be there here. Okay. Dollar. Okay, we have the Dolex 100, Dolex 30. Okay. Seeing this for the first time actually. I have no idea what this is. This is something else. Okay, leave it. There was the Nifty in dollars index. I'm not sure where that is, but anyhow. So what I was saying is, going back to the FTSE, that if you were invested in the FTSE, technically looks great, but losing on the currency, then you'd actually, who knows, may not make money. And that's what's happened to a lot of the global investors over the last many years. As far as India is concerned, if you look at the Nifty converted to dollar because of the devaluation of the uh, rupee against the dollar, right? All right, so US, Europe, Japan, all looking really, really good. Looks like they are set to go even higher, in my opinion. So on the Indian market, well, maybe we should be looking for some strength, and of course it is there. uh, Otherwise, however, where is that? Right, this is the thing I want to focus on, which is the fact that we really have um, this big formation which is there, and this is something that we must keep in mind. So in a sense, we have a sort of double top there at 11,150 or thereabouts. Okay, so that's the double top there, or a little lower. And this could be, not really, but an extended rounding formation. There's a clear neckline at 9,720 where the market bounced off last time and has gone up, and it probably is coming back to 10,100. Yesterday was a pretty small day, so around 10,000 there definitely seems to be, I would say, some wait and watch. And as we have been doing the fundamentals, we all know that the market is quite expensive at 10,000. So fundamentally, uh, correction is definitely due, but whether it will happen is a moot point. So we'll have to watch out for this, and this is a really critical zone at around 10,000 to 10,150. And from the looks of it, you know, let's look at one sec. Yeah, from the looks of it, if you look at indicators, volumes, etc., um, really nothing great right now to say that it's likely to go up. You can see the MACD has turned over, and this is a weekly chart now. The RSI is going down, stochastic is going down, right? And there seems to be some sort of a distribution pattern which could be there. However, we have seen this here also in October of last year, and the market turned down, went from 8,850 to 7,900. So that's a clear 15% fall. And then who knows, we could still do that. And one important point which has not been tested as a support yet. So if you look at this from a long term perspective, and even on a, say, monthly perspective, right? So you can see that in different scales, this is important. It goes up, comes down. So this level, right, ideally would have come a little lower to test these, right? And we had this move double top, it has gone up, and this would perhaps come down to touch 8,700 at some point. When that could happen, of course, is really tough to say. And if we look at it right now, you can see a clear bearish divergence in the uh, monthly chart itself. And this is really crucial. Bearish divergence in the monthly chart. This is not to be ignored. Now, thing is, this is a monthly chart, and it could take quite a bit of, actually 2 years of charts. And here, it could really take some time before this plays out. So according to this, I would think that with the MACD or even the RSI here at 68 and the peak here at 78, even if the market went up 100, 200 points from here, 10,200, even then we would get a divergence. So it'll be interesting to see how this pans out. So we are clearly seeing a bearish divergence on the monthly, and on the weekly we are seeing an MACD crossover. So monthly there is bearish divergence, weekly there is a crossover. There seems to be some sort of a topping out pattern happening with the index. Definitely can't say that a reversal is happening, but a significant topping out is very likely going on. And if we see in the daily chart now, well, you had a divergence here also, right? If you there, so from this peak to that peak, that was a higher top, right? You had a divergence there, and we had a divergence on the MACD too, right? So that's where it is. And I think there is something, yeah. And if you look at just MACD, okay, this is after right, it's come, MACD itself has come to around where its highs and tops are. So this is another thing to keep in mind. It can go up further, right, as it did say even here or here, but it's unlikely that it is going to sustain, in my opinion. So we have all these things to think about and work with. I will clean up this chart later. There's too many lines. All right, so the view on um, the Nifty, my view is that this high of 10,150 at this point is the critical point. Need to really look at it and how it behaves like that. There are it could go there, and if it breaks out, then this could be some sort of consolidation between 9,700 to 10,150. So if you look at it that way, then 450 points up will make it go to 10,500, right? The 10,500, if it goes, okay, nice move. But again, the fundamentals would be really in a very tight spot, would have become even more extreme, and we'll have to see how that happens. I mean, what happens there? If that is, if it breaks 10,150 decisively with volumes, and there's a trading opportunity all the way to 10,500 possibly, right? But on the other hand, if it goes to 10,150 and turns down, then we'll have a triple top in place, and usually triple tops are pretty tough to break out, and they will take time to break out, and then after that we would see it quite possibly coming back to 9,700 at. So, and if that happens, that will be a good shorting opportunity. So this is really interesting to keep a watch on that. What will happen at this level of uh, you know uh, 10,150? Are we going to break out of that, or are we going to see a retracement of that? So this week, next week is of course Diwali, so there could be some sort of euphoria and all. But again, if you go back into history and look at whether that is really true, it doesn't really seem to be very true in terms of Diwali and mm, the rallies that are talked about. So anyhow, this is the view. So limited upside for now, and then after that we will review on what's possible there. So trading opportunities, both long side and short side coming up. Right now it's in the sort of no man's land. Let it go to 10,150 and then take a call on whether a long or a short is possible, right? Okay, but indicators wise, weekly, daily, and monthly wise, things are turning around. So if not this week, maybe not this month, maybe even not next month, uh, uh, sometime in the visible future, I would say maybe 3 to 6 months max, correction is quite possible. Okay, looking at the Nifty Junior Index, also called the Nifty Next now actually. These are, I should just change these colors, otherwise distracting. All right, so this is the Nifty Next 50, and it's been consistently coming to the 100-day moving average, as you can see, and it'll be interesting to see what it does there. This is possibly it's a very critical point. 28,500, 28,500. Will it make a lower top here, or will it break out, is what I want to be watching. Moving averages have flattened out, the 50-day one for sure, and yeah, there are clear divergences on MACD, and MACD didn't have a divergence, sorry, RSI did. Excuse me. Oops. RSI had a divergence, so that's also there to be kept in mind. And so if this price here forms a a top, then we'll have a sort of uh, okay, wondering whether there's a pattern there. No, leave it. Oh yeah, this. Alright, so this is interesting. So this is what I had drawn for myself on some study earlier, which is this line, and this was looking like a wedge, but it's not. And if we actually look at this as a, let me on, so I'm just using a clean sheet here, and if I use this as a line, right, because sometimes you see things better on, right, no wedge, not yet. So there's a nice uptrend channel which is there, so that's that's fine, right? So there's still a uptrend channel weekly, and so what is important now to remember is that if the return line here is not met, if the market does not go back to the return line, it does indicate a weakness which is potentially there, and that's what we are possibly seeing here. And if you look at the way the candles have become small, and when we've got these dojis, then that's really something which is not really healthy at all. The bulls are definitely losing strength. Even if I don't say that bears are gaining strength, the bulls are clearly losing strength for the last almost a week or more. So we are at a, I think, critical point there, right? So that's what the Nifty next is saying. More or less the same picture in the CNX 500, the broad market index, right? And clearly, even in the broad market index, divergences are there, and it is there in the MACD. It is there in the RSI. Okay, not there in the stochastic, but that's a very short-term stochastic that I have, and that's your line there. So this definitely not right. So broad market, narrow market, just about every market divergences are playing out. Let's look at weekly. Yeah, same thing. MACD crossover has happened, and let's look at monthly. Then yeah, divergence is there, very much there on the monthly chart. So right there you have the divergence on the monthly chart. Okay, cool. So more and more reason for a fall to happen, looks like. So let's move on to the sectors, the sectoral indices. So we have the Bank Nifty first, looking at it, right? So Bank Nifty just showing weakness. I mean, look at the very clear divergence in the Bank Nifty there, right? So uh, double top, very clear double top on the Bank Nifty, and very clear divergences on the RSI and MACD, and there's, in my opinion, no strength really here. Again, crossovers in MACD, RSI, etc., going from overbought to the lower zones. And if you look at monthly, then yeah, again, uh, we have a not a very strong divergence, but okay, let's not fit things. There is, if there is very mild divergence in the monthly chart of MACD, MACD divergence or RSI monthly chart of Bank Nifty. So it's weak, but on the weekly and daily, it is definitely there. Now, just like we were speaking for the Nifty here, whether the Bank Nifty will hold this and go up, or this is going to um, go there and come down from the looks of it. And if I were to compare, Nifty here, you can see Nifty has bounced nicely to the top, right? But if you look at the Bank Nifty, it just seems to be creeping and crawling, and 24,500 is definitely an important short-term resistance to tackle. And if that does not break, then very unlikely 25,000 is possible, and it could just turn down. So, or is this going into a multi-week, multi-month range-bound move? Already 1, 2, 3, maybe 4, 5, 6 months, and then something will happen. No way to say, right? So we'll just wait and watch, right? But definitely, like I said, over the longer period of weeks and months, this is looking like it has topped out. And if we look at where is that bank PSU index, then this is clearly one set of banks which are really, really weak. They have just been going down and really nothing much on it, right? Okay. All right, so PSU banks really looking weak after they broke this multi-year support, which is here, uh, 3,400. Looks like 2,800 is the next real support which is there for this PSU bank. So till then, really nothing to do. So we'll leave that. So moving on, let's look at uh, auto index. Again, you can see this sort of double triple top sideways rectangle type formation. I think that's what we will see in most of the charts. So again, really nothing on the indicators. And here, yeah, this is the auto index where clearly there is a wedge or a triangle or a ascending triangle which is forming. Whichever way I want to look at it, even if I use the extremes, I think this is what we see here. And if once this breaks down, then we could have a pretty sharp fall. And this is on the weekly chart, please remember. uh, on So this is, if you look at it from the daily chart, we're talking about all the way from here to there, and this will be there. All right, so looks like the end game in a sense for the auto side, which has been playing out from October last year, is so 1 year actually formation. And if you go back to the 2007 end, Jan 2008 ascending rising wedge, that was like 6 months, I think, right? So this is 1 year, and this is getting more and more squeezed as the apex comes. And if you actually look at the apex, it will probably go into Jan or something of 2018. So really nothing to say there, right? Okay, so leave this, but keep this in mind. We have this ascending triangle, and we also have a resistance at 25,000 on the index. Coming to consumer durables. Okay, so this is one place we usually don't look at. I'm not sure what is happening here, but big up move in the last 1 week. Interesting. Look at the big divergence and weekly. Okay, there's definitely a divergence on the weekly. This is from there to there. While this is from here to here. And this is from there to there. Right, so clearly consumer durables, while they're looking really good and actually quite well poised, not sure that there is much upside left. We'll have to. Alright, capital goods. Okay. I'm happy to see this. In the same, what I'm happy about is this capital goods is one place where we've not had a lot of movement. There is no divergence, first of all, right? So that's a good healthy sign. Seems to be narrowing and consolidating almost like a flag, but there is this important 18,000 level for it to break out, whether it could or could not, and it has not broken out of the 2008 peak, right? This is one place where there could be opportunity, and we are looking at the weekly chart, mind you, right? So no weakness there. Let's look at the daily chart, right? So this is almost more than a year of consolidation going on right now and this indicators would not be very useful there. However, one small thing, whether this is a downtrend flag that is building up, right? And if it breaks down, then 18,500 to say almost 17,000, 1,500 points down. So it will break 16,800 and who knows, maybe go to 16,000. So that is a possibility in the short term, right? Uh, but as part of a larger pattern here, it is consolidating between 18,300 and 16,550 until it decides what it wants to do here. We can't really say. One thing that comes to my mind as I'm speaking about all this is if with the lower GDP numbers that have been announced, the government decides some sort of a fiscal push and investment, infrastructure investment, or something big, and it would definitely be on the infrastructure side, is what I would think. Then this is something which could really take off, and who knows if it breaks out of the 20,375. First of all, breaking out of the 18,200, then we could see a much bigger upside that is going on. Who knows till how much higher levels, right? So that is a distinct possibility which is there to keep in mind, right? So short term weakness is there because of the downtrend flag, but longer term, whether it can break out or not, that will be something that we have to watch out for, right? Unfortunately, we don't have a FA for just the capital goods index. If we had, it would really be nice. But Ramesh, maybe we should focus on this and see things like LNT and other stuff, and you might find something there. Just we'll take it up. All right, FMCG. All right, so FMCG daily, right, made a new life high. It's gone now. It is consolidating. All right. Tough call. Not sure what this is up to. I mean, no weakness in the indicators, consolidation. This is a weekly chart. Monthly still looks like it's going up. Daily, again, there's nothing in the charts to tell us about um, it's what, July onwards, mid-July onwards consolidation. So FMCG is just consolidating. So nothing there as such, but FA wise, definitely expensive. So there's nothing about that. Healthcare. So in a downtrend, very much, right? Long-term downtrend. You just have to, I think, keep that one thing in mind, that this has a long way to go. Right, it keeps jumping up now and then. You get some good news and then some bad news again. And healthcare from 18,500 to 13,000 seems to be recovering, definitely recovering in the short term. Not seems to be, this recovery, but it could just be part of a recovery like this that happened in April quarter last year, or this year rather, and then gets beaten down again. Same way with CNX Pharma, that's where you see it. And well, okay, so there is this line I had drawn, which is, I don't know why I drew this. Okay, leave it. Right. So you're getting these sharp recoveries, but really nothing much there. So we leave that.
One more thing, Musa, if I can take 15 days leave because I have enough leaves left actually. Another just 2-3 months is over for this calendar year.
Okay.
So
Okay. So CNX Pharma. So one thing about pharma is, of course, that it's possibly uh, coming to a technical, really good sound support level. But we'll have to see as to whether this is really the end of the fall, or way too early to say. But it is possible that you can see slight bullish divergences that are happening in the pharma index, right? So that is really something which is good. And monthly wise, if this crossover happens at some point, stochastic has bottomed out. RSI, only one, here it has definitely given us something there. MACD lagging indicator, so it might take time. So it is possible technically that the pharma index is actually, hinting at a good base formation. I think this is one another place where we could look at for finding some potential longs, uh, which could give us so limited downside and more significant upside. So let's see what happens here. So this is definitely so while everything else seems to have been topping out and ready to fall, this one seems to be perhaps way too early to say, getting ready to move up. Let me extend this into the future. These are all those lines which we tend to ignore because they are not on the screen, but they suddenly surprise us. And here is one more that we'll keep a track of. Okay. All right. So that is pharma. So that's a good find. And like that, I think our IT index is another one which, so this is daily IT, right? So one index 2015 peak 12,800, fell to 9,000. So basically almost a 40% fall that has happened, and then has risen quite substantially from 9.4 to 10.5. Okay, about 10%, not substantial. And from daily perspective, it is right now quite sharply consolidating, as you can see, and looks like ready to break out of that consolidation and perhaps move higher. So this is where the IT space is. And on the, so it's been consolidating, by the way, for a whole 1 year, November last year to now. right? Almost 1 year of consolidation. If I remove this and push it higher, no, okay, leave it. So there's this other multiple levels which are there, which are confusing the chart perhaps. So just to clarify, so this is a multi-year drop, right? From there, this yellow line, multi-year downtrend line, you can see it's a 3-year downtrend line. Then that has been penetrated 2-3 times this year, while you've also got getting higher bottoms. So I think this is definitely set to move up. And in a shorter time frame, if you look only from this horizontal line onwards, then we've got a symmetrical triangle which is set to break out, looks like. So CNX IT space could definitely be a place for upsides in the coming weeks and months. Looking at it from a weekly perspective, you can see the same thing here. More in the weekly chart, looks a little more like a ascending triangle, but this is a different one. That symmetrical triangle was only for this part of the chart. This is looking like a symmetrical triangle, which is more like you know um, for a longer time period from April. If you look at this 10,800 to 10,800 points, 8% up move could happen. 10,800 plus 800, that's 11,600. All right, so 11,600 is almost here, right? 11,750. Right? This is almost there, back to the next resistance. From a 1-2 quarter perspective, by the end of this fiscal year, this could be a place. This could be something that really, has done quite a bit, right? Okay, where is that? Some of my studies are missing. Okay, I'll fix it later. Okay, so pharma and IT again, looking at it from a monthly perspective and looking at, oh, look at this. Really good find, I think. CNX IT potential MACD crossover. Okay, too early to say, but it could be crossing over. And if it does, that will really make the IT stocks move up quite substantially, right? And that will definitely be a good thing. So we could see a nice move on the IT stocks in the weeks and the months ahead. And this is just this month, one nice move up about 300-400 points on IT, and we could see much higher levels, right? Yep, that is a distinct possibility on IT. Nice. Okay. Good one. Good one. Time to do a fair review of the IT stocks. Okay. Did not expect to find this, but good we did. So we've done IT, pharma. Let's look at infra. Is CNX infra? I think I should just remove it from my list because that infra constituents are just too broad based. So leave that. Let's look at metals. Okay, so here's something very interesting for metals, which is the fact that if you look at it, they seem to have broken out from a multi-year, almost a 1-year downtrend break, and they have consistently gone up for the last 1, 2, 3, 4 months. I don't know why I didn't see this earlier. Really bad. Right, so metal index, nice multi-year double bottom, and then nice rally on this from 11,700 to 14,400. Wow. And I don't expect to see anything in the weakness in the indicators. There's none. It's actually very strong. And then looking at it on a weekly chart, yep, metals have moved up. So in spite of a weakening economy, right, so here is a really good find. Metals breaking out of their multi-year downtrends, breaking up from multi-year horizontal supports, resistances, and quite a big upside left, in my opinion. Right, so this is where the peak is, and of course it won't go there straight line, but 18,000, 17,000, 14,000, definitely possible, right? Imagine from 2016 beginning to now, this index has doubled, right? The index has doubled, and definitely much more upside which is left on the metals side. So this is great. Okay, then again from a indicators perspective, there is strength across the board in metals, IT, and pharma. Power index 2012 onwards, so this is clearly has significant resistance, which this is a weekly chart, monthly chart also could break out, but too premature right now to say anything about that. So let it break out, and if it does, it could do something like what metals has done in the coming 1 or 2 years, right? Okay, that is interesting. If you look at the daily chart metal index, so clearly could support 200-day moving averages, and then whether it will move up or not, that is a good point. We'll have to wait and watch. Okay, and then PSU, leave it, reality index. Okay, so reality index, a lot of news about failures and bankruptcies of real estate companies, right? Another index which is on the verge of a multi-year, 6-7 year resistance at 2200. Whether 2300 breaks or not, we'll have to wait and watch. And okay, weekly chart. Okay, weekly chart, though there is a crossover here on the weekly chart, and you can clearly see the stickiness there on the resistance side. If I look at it from a, why is it like this? Crazy. Why is it? One sec. Alright, so if you look at the monthly chart of metal, of reality, also gone up and sticking there some. So there could be another opportunity. So looks like some of the real big sectors, IT, pharma, realty, and metals, right, are really doing well. Banks and FMCG and whatever. What else is there? Autos. Yeah, those are the ones which are and could be really in trouble. So think about it that way. Quite possible that there is upside left. Who knows? It's definitely becoming a stock specific and sector specific market. There is no doubt about that at all. And be interesting to see what happens next. Okay. Hmm. Okay. Reality. So what I was saying is there is some MACD RSI, but that's to be expected. And one more thing important reality to understand, the index has broken from all the long-term moving averages and has gone up. So technically that is another place where good strength is it's by definition it has become strong. Okay, by definition that is over all the long-term moving averages. That's all. So this is something which is good. Let's see. And then yeah, we finished everything, I think. Have I missed anything? Nope. All right. So good. So clearly the indices have been broken up into some really good short auto banks and FMCG, right? Longs, metals, realty, um, capital goods. Capital goods is a question mark. Metals, realty, and then IT, of course, and pharma. Right. So clearly, this is how it looks like. It is. Be interesting to drill down deeper into these uh, indices, maybe uh, even more fundamental data if we can get, and see where this goes. All right, so I think with this base work done, because today we did in detail weekly and monthly also, I think this gives us a really good foundation to drill in deeper and to find some good opportunities in the time ahead, right? All right, great. So that brings me to the end of today's part one of the IMR. At some point, we will move on to look at stock specific charts, but that's for a later session, right? Thank you for your participation, and those of you who watch the recordings, if you have any questions, queries, do feel free to get back and discuss. Right. Bye.